I think that what is most likely is that the changes in this week, the hikes this week, are going to be a non-event. Everybody is expecting the Fed to hike by 25 basis points and the ECB to do it by 50. I think that that is already in consensus. I think that the problem is that investors continue to believe that there's going to be a reduction in rates in the second half of the year. Central banks have been saying over and over again that that is not the case, that inflation remains too high, that core inflation is the problem. We have to remember that we're in the middle of a rally in which core inflation remains extremely elevated, despite the reaction of commodities with a U-turn. So I think that that is what central banks are going to be focusing on. Reminding investors that it's not about reducing rates in the second half of the year, that it's about maintaining the path and then keeping rates at the expected level from then onwards to see if inflation finally does come back, which it isn't in terms of the core goods and services, is it?
So given that's the case here, Dan, do you think the equity markets and the bond markets are still running ahead of where the central banks actually feel interest rates need to be?
I think that bond markets and equity markets have got a little bit too excited about the idea of a change in the central bank rate hike path. And I certainly believe that the European market is not discounting the more aggressive tone of the ECB. So we need to be at least prudent in terms of taking action on duration, on very cyclical stocks, because the earnings season is not helping either. So far, the earnings season in Europe is pretty dire, and I would not be looking at guidance to be any better. In fact, what we are seeing is all over the spectrum, companies being extremely prudent about an outlook that doesn't seem positive, certainly to suggest that the consensus estimates for 2023 and 2024 are acceptable. So I think that we need to be a little bit prudent. I think that it's a good moment, like it was in August, to reduce exposure to the more cyclical stocks, and certainly to rebalance, because Europe has certainly gone way ahead from where it should.